Hello, 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 everyone. How is everyone doing this fine Sunday? Hope everyone has had a great weekend so far, doing the Sunday stock market prep so I can prepare myself for the coming trading week and then have a head start and not leave everything until Monday morning. Again, thank you for being here. Hi, Patrick. And if you're not here, you can only watch it live, which I understand, especially when it's summertime out there and you might be spending time with your family or doing yard work or something else very nice. So if you aren't here live, thank you for watching it on demand or on the recording. Hey, Daniel, have a good afternoon. I think we remember how Friday ended up. Rather red day, but not triggering any major sell patterns yet. We'll take a look at that in a minute. And by the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button so you know when I do go live longer term. Subscribers, please like or dislike the videos if I say something silly, and leave some comments. I really implore some more of you to come back and leave comments. The comments are up, but I'd still like to see, let's keep getting it out there. Hello, Josh. How are you today? So let's just see. Let me switch to the other camera. Again, we don't need to recap Friday as much since I did that on Friday afternoon. But this coming week is very interested. Nothing going on tomorrow in terms of major market moving stuff from the U.S. Uh, Tuesday, you got balance of trade, imports and exports, minor consumer credit change. I will be paying attention to that, but that's at 2 p.m. Central, so right before the close. Wednesday, you got mortgage stuff. Again, mortgage housing market is slowing down. So there shouldn't be much of a surprise there. Wholesale inventories will be interesting, but not majorly market moving. Oil stuff will be interesting, especially since we might be putting in a short-term top in the next little bit. Thursday, continuing jobless claims and initial jobless claims minor unless you see a big miss. The big day, June 10th, Friday, 7:30 Central, 8:30 Eastern, core inflation rate, both month over month and year over year, and then Michigan consumer sentiment preliminary for June. So before the market on Friday, big day, and right after the open, pretty big. So Friday's going to be the big market moving day. FOMC reminder there now, why you didn't see any Fed speakers. Quiet period. There's the quiet period because the meeting is 15th of June. So not this week, the following week. Wednesday is the meeting expected with that 50 basis point hike to take it to 125 to 150 basis points. And just a reminder, we are still in negative gamma territory, so up and down moves will be amplified. Good afternoon, Sashi. How are you? So what I put up the sector overview also to try to help out with that. So please do watch that. Also, I recorded it Friday afternoon. The Jim Iorio Futures podcast will be dropping tomorrow morning. So if you're interested in all that, plus we did some little analysis just on a value stock sector. So that's interesting, but that will be dropping tomorrow morning, and all the data is completely relevant for what's coming. So I would ask you to consider watching that and tuning in. It was really fun. Hey, Dr. Michael. Good to see you too. All right, still, if you didn't catch it on Friday, interesting position because we've hit the first target on the double on the S&P, the first double bottom target, and pausing right there. I consider this a horizontal correction. What would I need for the bigger pullback? We break on a closing basis for the daily below the lows from June 1st, 4,071.50. Then I'm going to target roughly about 4,002, 39.83, 39.54. What gets me very bearish is if we close below 39.54. We could hit that, not close below it, but closing below it, then that favors statistically a return to 38.57 to the 20th of May's lows. Right now, you see the first cross of the rotation zone. Daily cycles rolling over, so could be choppy. However, weekly cycles still have some room to run. And you can see first reaction in the weekly rotation zone. And if we complete the double bottom pattern, that just takes us to the other side of the rotation zone. So it's sort of a mixed message, but with very little stuff, and with the Fed meeting not till next week, we could see another push higher. What do I need to really start seeing overnight? I want to see if it does rally 41.53, how this area is tested. If we do, then I'm going to target 41.80. And again, key support is right here. You see this prior support ledge here, which is broken below briefly, but you have the flat 50, about 40.95. We break down, going to watch how it tests these lows then. So that's where that sits. Can we test the 2-week back lows on SPY this week, or are we expecting amplified moves up? Well, I think I just went over that. What would trigger me? Right now, it's why is it a horizontal consolidation? Because essentially, we had a 4-day trading week because of the shortened trading week due to Memorial Day in the US. And yes, 3 red days, but if you look, this is just, we had this major ramp off the bottom, and this is just a horizontal correction so far. If that double top triggers, then I'm watching for the bigger pullback. Close below the 62.5% harmonic, retest of the low areas. Other than that, the double bottom play is still easily in play. This was just consolidating, working off the overbought condition and letting the cycles top and roll over. Good evening, Anissa. How are you? Hello, options 22. NASDAQ roughly could not get to that first target. That first target is very key on the NASDAQ because it's where the 50-day exponential is sitting. Let me take off a couple of these levels so that we're still from the podcast. Still sideways correction with a lot of volatility in the NASDAQ. This is a valid double top. A close below June 2nd's low, and I need a daily close. Unless there's momentum bars really breaking lower, then I could trade it intraday. But I'd still need a daily close below that, then to target major areas 12,214, then 12,112, and then 12,002. Now a close below about 12,029, 12,030 area triggers a major bearish downward move that would retest the low areas. Before that, it would just be a pullback, and then I'd watch where it closes. Other than that, still sideways correction. Cycles on the daily trying to roll over. The weekly still has room to run. And you got the first reaction with the weekly rotation zone. So this could still have some upside pressure, but it really needs to show itself at the beginning of this week and not trigger the double top. So pretty much the same scenario, but for any up moves, I'm going to be focusing on stuff like the S&P. For down moves, I'm more focusing on the NASDAQ because of it couldn't even hit the first target. Now, if none of these doubles trigger and the NASDAQ finally does show a little more strength, then I will really start targeting the upside targets. Dow, remember, we did not have a double bottom target. These bottoms were too far separated. We do have the double top target. That would need a close below the low of the June 2nd, which is 32,491. Those targets then would be 32,078, 31,872, and major target coming in right at the 62.5 harmonic, about 31,665. A close below that level, then I'd be watching for the retest of the lows back at around May 20th. And those two levels, 39.43 down to about 35.88. To the upside, same thing. We're going to need some price action with the overnight to really see. But if we do sell off, 32,670 is key, and a rally 33,214 is very key. The Dow came off the lows the strongest, and now this is also still a sideways correction with the first cross of the daily rotation zone, with cycles rolling over on the daily, but still turning up on the weekly. So we could still get some upward price action. And if we do, my major focus is about 33,800 initially. Russell, we still have this double bottom on the daily. And we also have a double top, which I don't have on the charts yet. I would shift this once we know if this was the top and it triggered. I'd actually shift it to the conservative targets, which would be on this side as long as it does not exceed the left-hand side. But for now, I'm just going to give you an idea with these targets. That would be on a close below June 1st, and that would be on a close below 1827.50, 1787, 1767, and 1746. The key closing basis is all the way back at 1777. So if you got a daily close below there, that would favor a return to test these Russell lows from the middle of May. Other than that, Russell nearly coming up to hit the first target. So on a move up, 1913, 1949, 1984, again, similar to the other indices. Daily cycles trying to roll over. Weekly still has a little room to run to the upside potentially. All right. We have the DAX. My main focus is on the double top. I should call it a potential double top. 14,305 is the trigger for that one. 14,157, 14,082, 14,008. If we reverse up, again, it's holding the daily rotation zone, so this is slightly lower probability. If we break above about 14.6, and statistically we still favor, even if we trigger this double top, we still favor a technical return to 14,727. If we start selling off, I'll give you the levels that tip it away from there if we start selling off. Crude, I talked about this in weekly sector overview, so please hear my thoughts on that. But crude, we do have a little potential double top, which if that triggered, my first major target would be about 107, and then I'd be targeting a return to the bottom of the channel area right around 103.50. Other than that, I'm staying in short-term bullish mode. We did get the close above the 62.5, which technically favors 120, close to 126. I won't really get aggressive targeting that till I get a close above about 121.25, especially with where the cycles are. Daily at the top, weekly at the top. So we could start seeing a potential pullback move at some point in crude. So based off stocks, this is where we even had another really nice update and things like Exxon and everything on Friday. So just keep moving up stops. I did talk about that on Friday afternoon. Gold, just keeping an eye right now. I did talk about this with gold with Jim a fair amount. My key area right now is about 1846, and then on a closing basis 1830. But as long as we stay above here, I'm looking for higher plays even on pullbacks. Silver, unless silver gets back below about 21.28, I'm still watching for bullish plays in this. And is that a double top? It's right. It's pretty much right there. So if we did start breaking down, we could target the 2140 if that does trigger, but we'll touch on that. Notes, we got the close below 62.5 back on June 1st and another one below on 3rd. So I'm watching potentially for the return to 117.23 to the lows. What would be interesting about that is that would form, after getting to the weekly rotation zone, a major double bottom pattern, even if it broke to slight new lows. So this, and I've said this for the past 3 to 4 weeks, we finally got a bottom pattern in, but they're now getting to a top pattern and potentially rolling over. So the first little bottoming pattern only took us back to the weekly rotation zone. Then now this could be another down move for at least a couple weeks before we put in a potential bottoming pattern again. So we're going to have to pay attention on that, but nothing aggressive to the upside for me yet. Dollar index is really sort of in no man's land right now. Coming back to the daily rotation, the weekly rotation zone with cycles trying to bottom. What would be the signal for this? This did pull back far enough to be a potential double bottom. So above 102.75, 103.47, 103.84, 104.20. However, and these could even pull back more. Now, if it does break below 101.27, my major next focus is 179. VIX will touch on tomorrow morning. It did get below that 25 level. If this does continue down, that's where I'm really focusing on the continued rally, because remember, we have 3 out of 4 indices still have double bottom patterns that are active: the S&P, the Nasdaq, and the Russell. But I need to keep an close eye on the VIX, because if this starts trading back above about 2650, we could be on the verge of triggering that double top on the S&P and the Nasdaq. Tesla, who knows what Elon, by the way, again, not a double, closing below the 50. So next major area, if this does sell off, and he was tweeting now what hiring, he was 10% layoffs. Now it's no, I'm hiring. Who knows what's going on with him? 685 is the next target. On a close below 685, then that favors a return to at least 641 to the low area back set on May 24th. But we do not have that close below that yet. So on any rally, my area is 728 to about 732, the breakdown zone, and only above there do I get, again, this would be very short-term bullish, because long-term it is in major sell area. And you can see running up after the multi-week sell-off, we got a 1-week green bar, another partial run up into the weekly rotation zone, and then the rotation back down. That's why any plays the upside are still just short-term bull plays only. Looking at the Qs, we still have, again, similar to futures, double bottom, valid trigger, a sideways correction. Actually, they held up remarkably well considering the price action on Friday, but we do have this little double top. You can see it here on the 4-hour. This is a completely valid pattern still. So you get a close below 303.40, 298.78, 296.47, 294.16. The major line in the sand, though, that takes the bullish double bottom off the table is on a close below 299. 292 something. I go roughly 292.50. That takes it off the table. So even if this pulled back, you could still have this double in play. Now, the problem, if you're trying to do this with options, the timing gets tricky. If we start, though, there's an interesting play here. If we start getting, let me just map this out exactly. If we start getting above 310.80, we have the full on a closing basis. Then we have the short-term little bounce play for a full gap fill, which would be to the June 2nd close of 314.39, and then I'd really start targeting the upper double plays again. Just a reminder, those levels are 317.30, 322.77, and 328.01. So as long as I know so many people are bearish, but if I don't have these bearish patterns trigger, I can't be in bearish mode, especially with weekly cycles still turning up. Yes, we got the reaction to the rotation zone. You normally, as I've said before, when you hit these higher time frame rotation zones, you usually get the reaction at the bottom of them and a pullback. And then you get, many times, unless the market is very weak, you get the second push in before the major rollover play. The spiders, again, weekly rotation zone, little pause bar. You see here the corrected sideways action, shorter time frame. We do have the double. You can really spot it nicely here. That would be a close below 406.93. 402.17, 399.79, 397.41. What tips this in the bearish mode? Even if you completed this double pattern, the only thing that invalidates the double bottom pattern is about a close below 394. So these would just be bigger pullbacks within and would not validate the double bottom pattern yet. Those patterns, should this break higher, and you do have a gap still here, so I will be watching for that gap play, and that's, you get a close below about 414.50. Then statistically, it favors that return to fill the gap at 417.36. And then I'd be watching rolling it into the further double play. What's interesting is also you have the 200 simple on the 4 hour at the top of that. We reacted also on the daily to the 50, where we got that pullback move. But we do have some potential room to run up, especially my major target, though, for these are pretty much the second target because of where it sits with the weekly rotation zone. And cycles still trying to turn up, or they are turning up, but still have not rolled over on the weekly basis. So that's what I am keying off of. A reminder, if we get into bullish mode, I will still, even though Microsoft guided lower that causes gap down, they recovered and this was a pretty decent day. Even with the gap down, it could not get a lot of rollover. So if the NASDAQ and S&P turn bullish, I'm still going to be watching Microsoft for short-term plays, also reaction to the 50. And those next two target, I retarget 277.65, but then 282.06, 286.64. Another one, if we get bullish, NVIDIA, which hasn't hit the first target. So if we turn up here, 197.65 and then about 203 are my key targets I'm looking on with that. AMD, by the way, is another play. This is actually stronger than NVIDIA. This double, a little sloppier with this pullback, but we've already hit the first target, and they actually, even with the gap down, managed to close higher. So even on slight pullbacks in this one, we can get the strong push up. The next targets I'm watching for, if the NASDAQ and the S&P are both strong, 111.44, 115.36 to 117.02. What is your bias on wheat and natural gas? Let's see, natural gas. Natural gas is coming off of a major push up with a divergence pattern. So I'm watching for a potential short-term pullback. Okay, especially if we get some weakness across the energy sector. And my first target on that is about 780. If we start breaking below 780, all right, which is right here, then I'm targeting 738 to about 710. I cannot get long-term bearish on natural gas. You see here, even to a bigger pullback into the weekly rotation zone, we do have a valid double top, but the only thing that would get me into bearish mode, watching for the substantial pullback, would be on a weekly close below all the way back down to 643, and it's a long way off. So right now, I'm in watching for a topping pattern to potentially roll over, and you do almost have a very sloppy head and shoulders here on the short-term basis. So we could map that out. If we break down below here, let me just map this out so we get an idea. I don't even know if this is valid. I didn't finish all my analysis yet on things like natural gas, but thank you for asking. You start breaking down, and these are rough because we haven't violated the next line yet. And yes, it would be valid, but we'd be targeting this 751 and then 715 would be the two targets I'd use. So you start breaking below this neckline, and I'd want a daily close below that, preferably a daily close below about 810. You get that daily close, then I'd watch for that short-term bigger pullback. And where would that sit within the weekly rotation zone? That just takes us, especially the first and second target, actually just takes us back to the 25. Hold on. Incorrect. I didn't raise this. Sorry about that. Gotta make sure my analysis is correct. That would roughly take us back. The first target would take us back to the 25% harmonic from this little topping pattern. And even if it completed the whole pattern, it would just take us back to the weekly rotation zone. And then, as long as this major double did not trigger, I'd then assess the strength on the next rotation back up. On wheat, I like this. Anise, thank you for being here, because I take it you trade futures fairly regularly. Wheat at this point, Let me just flip this around. We do have a potential major bearish pattern, and that would be surprising if it triggered, but interesting enough, right at this potential double top, which then we'd have the weekly rotation zone out of the way, and it would favor a you'd also get the close if it triggered on a weekly basis, the close below 975 roughly. That statistically favors a return with the first target being virtually the same at about 818. And then the next target being at this lows back from the end of January at 740. Other than that, we are in a consolidation move. Now, I'm going to watch what happened because we closed below the 62.5. See, we closed right on it, then we closed below it. So statistically, that favors a return to 1009 and then to retest this low area. So I cannot get bullish yet again until we get this retest and we watch for how it behaves down here. You can short wheat with futures, or you can play options on the futures. So, but also if you remember, if you're watching, if you watched my sector overview, if a bunch of the grains act toppy, again, DBA could be rolling over also. So you could play it with DBA. You could figure out some plays with DBA. Corn's broken down and sitting at a very critical juncture, by the way. This is where I'd watch DBA closely because you see this key level about 726 in corn. You break below that, you go into a minor clear path move, and there's not much support until you get down to 695 to $7. That's why I'm keeping an eye on corn closely. Soybeans are actually the only thing that's holding up well. However, doesn't quite qualify, but I will use these targets just for now, because this is actually too close to the head statistically to be relevant. But to give us an idea of where this could come down to if this neckline would be broken, and we don't even have it closing in on the neckline yet. If soybeans broke down, I'd roughly be watching for a retest of 16.15. But that would still be in a major bullish consolidation pattern. So soybeans are holding up the best, and look, even with me guesstimating that, that's just to the bottom of the weekly rotation zone, but keeps you in the consolidation. So it's important, even if you don't trade some of this stuff, watching the analysis on this can help you. Value versus growth. We had that little pop from growth. And if we still rally, I'm still interested in some growth stocks. So, but that's only on a rally. If we start rolling over, growth stocks are off the table. And mega caps, you see very similar. So I'd be looking for growth stocks in the mega cap range. But then those are going to roll over again. Remember, these are our long-term ratios. Mega cap triggered this massive double top and bounced off the second target. We still have a long-term target below, so that's why I can't be long-term bullish on mega caps. And also value versus growth. We bounced off the first target. I actually have to update these. We bounced off the first target, but on the next rollover play, I'm still favoring value over growth. But we have not triggered another rollover play yet. All right. I think that was pretty concise, pretty good for a Sunday afternoon in the summer, or getting to the summer at least. I don't know if you call 66 degrees here summer yet, but it's warmer than it has been. So I'm going to wrap this up for now. Keep it a little shorter today. I will be back at 8 a.m. tomorrow to help fine-tune stuff with the overnight price action. But just want to give people a jump start on the week. Again, thank you everyone for tuning in. If you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Again, longer term subscribers, please leave some comments, especially on these videos to help start off the week. You are very welcome, Anissa. Thank you for being here. I'm glad you are becoming more of a regular, and I hope to keep seeing you. I hope we've we've won your viewership. And everybody else who are the regulars, even if you're not here, I know there's some people who watch that never jump in the chat. I really thank you for spending some of your valuable Sunday time with me. Again, Sashi, thank you for being here. Options 22, thank you. Dr. Michael, thank you. Josh, as always, thank you. Daniel, thank you. And Patrick and everybody else who has not jumped on, thank you. Have a great rest of your Sunday, and I'll talk to everyone later. Bye.